All right, hey traders, TG here. Welcome to Wednesday. We got our morning review going on. And over here at profitpilot.com, I've got a webinar coming up tonight. It's a free webinar talking about the market, what I think is going to be happening. I think we're going to be seeing some more downside with this. And I'll kind of touch on that a little bit in this morning session. Let me know if you guys have any questions, any particular names that you're going to be looking at. I've got a little bit, a few names, but other than that, we kind of have to wait for things to pan out. And so it might take a little bit of time. But yeah, we got the link. We'll be posting that in the chat. And then also you can come over here to profitpilot.com and you can sign up for that free webinar tonight at 7 p.m. Central. So, all right, let's get over here to the market. Imran, good to see you. And then what we've been looking at is mostly a lot of chop. I know today is an up day like that, but I'm looking at this as a pretty strong resistance area. So we've got the hourly 200, we've got the third ATR, we do have the trend line, it is over the trend line, and then we also have a gap. So a lot of times with gaps, they are unsupported, and we're gonna have to figure out how this thing is going to find some support with that gap. So do keep that in mind that this move up, there's a gap, okay? And so we're gapping up into what I believe is going to be some resistance. And we can also see we're right here at the 618 resistance, and that was also resistance before. So, I'm a little cautious about this move up now. And also remember, we do have the CPI report coming out tomorrow. It would be very interesting in this market because they're always looking for excuses to do whatever they're going to do as far as the market goes. It would be pretty convenient to have the market jump up today, probably squeeze out shorts or get people in on the long side because it looks like it's really strong, only to then have the CPI come out and that be the reason that price goes down. It's just a thought, a theory. We'll have to see if it actually pans out like that. But it's kind of like how with the FOMC, a lot of times we get some reaction after the FOMC. Could be the CPI also, and then maybe that's not totally the issue, but next week we do have options expiry, so that could be a little bit of a thing too. So I'm looking at this and seeing some resistance. I'm also seeing that the Moxie indicator on the 15-minute time frame, not super strong. It is green and turning up, but it's not super strong. So I'm kind of looking at that as a possible, double top, but the Moxie indicator is down like this. So we need to kind of wait for this to pan out. As said, we might have something going on tomorrow with the CPI. The other issue on the daily chart is that we do have price right here underneath a downtrending daily 50. So again, we kind of have some of that overhead resistance that we kind of need to see what's going to be going on with this. And then if we go over to the weekly chart, let me see if I can get that there. Over here, one thing to be prepared about that, yes, we have bounced off the weekly 50. And for now, that's support. But if this market is going to be weaker and if the market's going to roll over, it can because the distance between the 8 and 21 has gone away. So if price wants to go lower, it's at a point where the 8 could actually cross below the 21, and we've gotten rid of that moat, so now it's free to go to the downside. So just kind of putting that out there as well as a possibility of things to note. I say that because if we look at the past, there's always been room between the 8 and 21 such that price basically would bounce off the 21. And now we're down at the weekly 50 and the 21 is not support. So things have changed. And this is why I'm cautious about any kind of up moves because these up moves could be coming into resistance as kind of like what I pointed out earlier. And then if we look at the NASDAQ, it's mostly the same. It's not as strong as the SPY. NASDAQ is mostly tech, and with interest rates going up, they're getting hit pretty hard because of that. And we can even see on the weekly, we have the 8 below the 21. So that's different. So this kind of looks like it could be trending sideways until it decides to roll lower. We'll have to keep waiting and seeing if that's going to happen. And then the IWM, and then the S&P is a little bit stronger than the NASDAQ because, as I said, NASDAQ is all tech, but the S&P at least has some other sectors in it, like consumer, defense, retail, and oil. So the IWM, came down here. It's been bouncing off that weekly third ATR, but I feel like it's kind of in the middle of nowhere. I don't see really any reason that the IWM is going to start trending up from here. Yes, it got oversold, and so this is kind of a a reversion to the mean or sideways flag. Maybe it's a bear flag, but I don't see any reason that this is really going to be constructive to the upside. So I'm very concerned and cautious about thinking bullish and still kind of looking at this as a pullback in a downtrend. So we'll have to keep watching that, see where that wants to finally run into some resistance. Some other interesting things. I've been talking about the dollar a while ago. Let me get that up and running. And a while ago, I was talking about the dollar. I was like, I think the dollar is going to start slowing down and rolling over, actually. And we got that in through here, and that was all working out with price underneath the hourly 50 and then whatnot. And then we got the FOMC, a week or two ago, and that shot it up. And like, oh, well, I guess that direction was wrong because clearly price wanted to go up and make new highs. But then immediately after that, it imploded and came back down. And so it's almost reinforcing my thought that the dollar was going to be slowing down. And if it continues to go that direction, we could see it break this level and start heading even lower. So that was interesting. This is the market for you. Sometimes things are really crazy out there, but just note that the daily Moxie indicator had some negative divergence and it's continuing to go below zero. So we continue to see weakness in the dollar. It's helping gold a little bit. Gold is back up again, but it's still not quite where I would want to be if I wanted to buy it. I like buying it when it pulls back into moving averages like that, and I don't see it pulling back into that moving average yet. So I'm still on the fence about gold. I'm not in too much of a hurry to try it again. And GFI was another one that I was liking to trade, and had a big move down, so I got out of it. But now it's right back up. So yeah, it's basically in a whole lot of chop oscillation through here, and then we have earnings coming up, and I'm just not going to be touching this again for a while. So that's kind of what I'm looking at. All right, let's see. And then Anders, Apple. Let's see. What do we think of the reverse trampling on the daily chart? Yeah, that's what I'm looking at. So I call it an inverse, but yeah, reverse, that works too. And I'm going to be looking at this. I do think that this is running out of steam. Again, my bias is to the short side with the market. I don't really see a very clean path to have it really, jump up and be long again and go strong and all that. I just don't quite see that. And so I'm kind of viewing this as the last little bit of energy before maybe it kind of rolls over again. I don't know how far it'll go down, but that's kind of what I'm looking at because in a way, I'd be looking at this as, here was a little dip and then come over and then we'll have to see if it comes like that, especially with this daily Moxie indicator like that. And then if we look at the hourly, I've been looking at this and it just, it's up, but it just doesn't look very strong. It just doesn't seem to be doing what I need it to be doing. And, that's kind of been my whole shtick with this is I think that this is kind of working its way out. So if we look here on the weekly, this could be the leg, the heel, the arch of the foot, the ball of the foot, and then you get the inverse elf toe. So kind of like a double top. And that's more or less what I'm looking at. I've been trying to follow this one and see if this is going to help give us any signs or timing wise when the market's going to do what it's going to do. So I just don't see really Apple like rip roaring out of here. And I think, again, that's going to be the sign of the market. Yeah, Anders, yeah, that's exactly what you're saying, that Apple seems to be holding the entire market up. But yeah, it's there. And as I said, you kind of look at this and say, well, there's a level here. That could be an issue. And then with that negative divergence, kind of the same thing I showed you with the dollar. So yeah, I think that's going to be problematic. But we need to keep an eye on it, see when it's actually going to happen. And if I show you the 15-minute, yeah, so this is another kind of clue that I have is going down on the 15-minute time frame. The 15-minute Moxie is not really strong. That's not really telling me that there's a whole lot of energy here. So we do have price back over the 15-minute 50. I kind of accounted for that. I told my subscribers like, yeah, price keep pushing up a little bit. But that 15-minute Moxie indicator is not strong. They are spread from each other. One of them is barely crossing over zero, and we still have a gap between price and the 15-minute 50. So this really has me concerned and cautious, and I'm not really trusting this. Let's see, Alec, look at a longer term one, huh? Let me get over to one of these charts. I have a lot of charts up, obviously. So there you go. Here's your monthly and weekly. Now, the other reason why I'm kind of saying that I'm not so sure that Apple is just going to keep moving up from here is because on the monthly chart, I'm seeing that there is a pretty big gap between price and the monthly 10 just after it hit the third ATR on the monthly chart. So between getting extended to the high side and still having some gap between price and support, I'm like, yeah, I don't, maybe Apple doesn't fall apart, but I just don't think Apple's really going to be making new highs at this time. So that's really my contention of what's going on. I just don't think it's really ready to go yet. I think that Apple probably needs to go a little sideways to down and come back into touch with the monthly 10. So hopefully that answers what you're looking at. And then Yellowfin, let's see, I don't know which one you're asking about. Oh, the hourly SPY. It was not in capitals, so I couldn't tell. So hourly SPY should reject the hourly 200 since the RAF is extended and the hourly looking for a narrowed down. Yeah, I agree. I think generally the hourly 200 is probably going to be resistance. It was generally resistance once, and I think we're at it again. And I've been kind of relating this to Nvidia because it gave basically a pretty good situation pattern. This is something I'm going to show and talk about a little bit in the webinar tonight. So if you guys are interested, make sure you tune in for that. It's free. It's tonight, 7 p.m. Central. The link is in the chat here. But yeah, got the free webinar for what I think is going to be happening in the market coming up and something to be prepared about. But if you look here, Nvidia did get rejected by its hourly 200 twice. And you can see the last time it went right into it and then failed the hourly 50, and then that was the move to the downside. And I feel like the S&P is very, very similar because the S&P looks just like this on the hourly chart. We have the 50 below the 200, and we've had price hit the 200, hit the 50, and now we're back at the 200, and I'm kind of curious if the next move is going to be down. Remember, we got CPI tomorrow. Could be a thing. It'll be real interesting. I think this is the fascinating thing about the market. It's like, all these different cross currents and crazy things to kind of be looking at. So could be some fireworks tomorrow. Marty, yeah, no problem. Let's see. What does it mean when the Moxie daily is below zero and the hourly Moxie is above zero and the 15-minute is below zero? It probably means you're in chop. Let's see. Do you only take long trades when the Moxie is above zero? Generally speaking, yes, I only take long trades when the Moxie is above zero. Because otherwise you run the risk of it being an inverse trampoline move, because if Moxie is below zero, it's negative. It's negative energy. So honestly, Marty, for what you're saying, that probably means you're in chop or you're flagging or something like that. So let me show you. I think Apple is probably a good example of that. This is something I've been talking to people who, if you own the Moxie indicator, this is a little nuance. The Moxie indicator firing halfway through this move, yeah, that's not a good situation. There's not really a setup. Price moved and then pulled the indicator with it. That's like the tail wagging the dog. What you want is the indicator to lead price. You want the indicator to be what sets up price. You want there to be positive divergence setting up the price move. When you get price down like this and price up like that, and you see the Moxie indicator down and the Moxie indicator up, there's no divergence. Price just bounced. It just got really oversold, and then people bought it and had earnings, and so there were things that caused this. And so in the bigger picture, when the Moxie indicator fires halfway through a big up move like that, it is not a proper setup. So that's what I see about that. And then yeah, we got the 15 looking mixed, and the daily is now crossing below zero. So yeah, when you don't have a whole lot of clear signals, it means we're in chop. And you can see basically Apple is in chop. Now it's a wide ranging chop, but it's chop. It went from up to down, back to up. Yeah. Let's see. Can you look? Yeah, we got that one. And then, yeah. So Gassan, let's see. Invax. What's going on there? And then I'll take a look at Bitcoin too in a minute, because I'm sure some of you guys have questions at that. Again, things like this, I am not interested in looking at these long. They are not ready. Yes, there can be up moves, but I just don't see them as being ready. And I think that the risk is that they're either just going to go nowhere or they're going to keep going down. So yes, you can see here that Novavax, Invax got oversold on the daily chart and it started to bounce, but did it really go anywhere? The first bounce was right smack into the underside of the hourly 50, and the Moxie indicator was very much below zero. Now, the other one, this one was a little bit better. You could see there was a double bottom. we did have positive divergence, and the Moxie indicator did fire at the right time. But you got to understand, what's the general context of this trade or this trend? It's very, very much in a downtrend. So kind of the best you could hope for is a little bit of a bounce or sideways movement. They do not have to go up. They can keep going sideways. And this is my point, is that yes, price is over the hourly 50, but it didn't really go anywhere. And now you can see prices back below the hourly 50. And what about the 15-minute time frame? Okay, there was a move here, but then it failed the 15. Okay, there's another move, but it failed the 15. Like, there's nothing really to do here. And these are the things that to really be paying attention to in times like this when the market's doing this. Like, if you're looking for the long side, there's just not an opportunity. And maybe if you're looking for a short side, maybe you're trying to figure out if this thing is going to continue to the downside. Yeah, it might. You can see it's clearly not holding anything to the upside, and the overall trend is down because of that hourly 200. So that's what I'd be looking at. And let me bring again to your attention Roku, just an example. First of all, things that are oversold can get more oversold. They can go lower. Look at PayPal, look at Square. And as far as moves to the upside, like, they can go sideways. They can just go sideways until they run into more resistance and then roll over again. So, be careful. Be careful out there. And then let's see. And then GBTC, kind of talk about this, because if I go over to the weekly, let's see, there we go. And I've gotten a lot of questions about Bitcoin and some Bitcoin miners, and what my thoughts were on them. And I just don't see anything yet. Like, okay, so there was a bounce. You could trade that little bounce if you want. If you're down on the lower time frames, that's fine. But as far as kind of looking at this as a new swing long or anything, I just don't see it. If anything, you can see that there was a level. Let me try and draw that better. So you can see there's a level. So just from that standpoint, and even Bitcoin itself, if you look at the Bitcoin futures, it came into a level. So it got defended and it bounced. You could also see that it got extended because price pulled away from the 8 EMA, and it also hit the third ATR. So yeah, there's a lot of reasons that we could look at this and say, ooh, that was pretty oversold. And this may not be a buying bounce. It could just be a whole bunch of shorts getting out of their position, which means they have to buy in order to exit their shorts. And that could be why price moved up. So that's one way to consider it. And then the other thing is this thing ready really to go long? Is this like where we should start buying? No, because we still have price below a downtrending daily 50. The Moxie indicator is still very much below zero. The hourly 200 is still in a downtrend, even though price is over. It's still in a downtrend. And we still have a very wide 8 and 21 moat on the weekly chart. There is no way that thing is ready to go up. So I'm looking at this and saying, there's no way I'm going to be buying this. I don't think it's ready. In fact, it's probably going to pull back before. How about this? If it's going to go up later, it at least needs to come down, retest the low area before it can go back up. So that's why I'm saying I'm not interested in buying this. I'd be more interested in buying it down here on the second, retest of the lows. But even at that, I'm not sure if it's going to work out yet. We have to wait till that happens and wait for things to confirm, because it could go down, rest a little bit, and go lower. Just look at Roku, PayPal, Square, that kind of stuff. You need to look for confirmation. Right now, we don't have any kind of confirmation on these things. Yeah, see, Al, let's go. Oh, and then Loco No Joko. What's up, man? Yeah. PayPal. No, sorry. And I've been talking about PayPal this whole time, be like, nope, not ready. I see nothing. There's absolutely zero things to do with PayPal. This thing is a long way away from being ready. You got to understand that yes, there could be like pops and moves and whatever. But let me show you like Baba, I think, as just an example. Let me show you this as something that looks like it's, kind of maybe reached the bottom of its decline and all that. And let me tell you, if PayPal does the same thing, and you're like, oh yeah, could be it. Look how it for PayPal, that was the low, that was the low, that was the low, that was the low. So if you're trying to actually buy something and think that this is going to start a new uptrend, look at Baba. Look how many times it's hit the same low over the course of 3 months. That's a long time to be sitting on something. So unless you are a very short-term trader and you can trade in through here on the hourly or the 15 or the 5 or something, I wouldn't want to be touching this. I don't want to be trading this as a potential swing trade, because look what happened. It also went right back down to where it came from. or thinking that you're going to trade this and, oh, look, that didn't really work. So this is what you need to probably expect with PayPal. Even when PayPal stops going down, it could really just go sideways for a very long time. These things typically they need to build a base. When you've had such a long downtrend like that on a weekly time frame, and what we're seeing on PayPal and Square, it takes a long time for them to really hammer out a bottom before they start going up again. And you know what? They may not. They may after such a big smackdown, a lot of investors not too keen to get right back into them and make them go up. So you have to understand that even though the market might start going up again at some point in the future and we resume our bull trend, the same names that led before may not lead again. That is a very, very big thing that you guys need to understand. So just because PayPal had its heyday and was amazing doesn't necessarily mean they're going to be one of the amazing leaders the next time. There's probably going to be a new crop of leaders coming up that we don't know who they are yet. And that's the game of what we're going to have to try and figure out is what are the next leaders. So I would honestly just, unless you're going to try and day trade in there, I'd honestly try and stay away from it because as Baba's the example of why these things may not just start going back up again. So yeah, PayPal. UVXY, let's go over there. Nothing quite yet, but I do see, well, I see the market slowing down to the upside. So I see UVXY slowing down to the downside. So I'm being patient with this. I'm kind of noticing, you can see here, the Moxie indicator is getting really nice and tight. And it is the Moxie indicator, like you can see price went like that. The Moxie indicator is like that. So you can see that there's some divergence coming in here. I do also see that UVXY is starting to kind of come into some of the support. Third ATR tends to like to bounce around there. The stochastics are low. So as I said, I'm looking at this interplay between the UVXY and the market, and the 15-minute time frame's telling me like something might start kind of working out to the upside. And I think the market is going to start running into some resistance at the hourly 200. And just so you guys know, the UVXY can flip around in a moment. So it's not a typical stock. It's not a stock. It's not a typical ticker. And you can see head down, 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 reverse. So there is the possibility that we could get down, 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 reverse. So in order to catch the next trend, I do want to see price actually engage with the moving averages, which it hasn't happened yet. And you can see here, popped, but did not engage with that moving average. So I got to keep waiting. So we'll see when this thing is really ready to go the next time, and hopefully it'll be a nice solid move. We can take advantage of that. Yep, Loco no joke, you got it. Yeah, UVXY is just a vehicle. Absolutely. Brighter side, good to see you, Nick. Yeah, the market is really choppy. That is very true because we just look at this. Let's see, SPY. It's just choppy. It's just choppy, and you guys can see I've got a lot of resistance areas right in through there. Loco no joke. The last 7 of 13 months, market has gone down. Week of monthly option expiry. Yeah, good stat. The other thing to kind of keep in mind is, and this is what I'll talk about this again in the webinar tonight, is that it is a midterm election year, and historically the market does correct pretty significantly in a midterm election year. So kind of maybe a reshuffling of the deck on that. And I believe the market's only gone down 10%, if I'm not mistaken, so far. And so if we are going to correct, 15 or 20, we've still got some room to go. So I think it was, if I just kind of do this, it's just 12%. Okay. So, not too bad. It was pretty significant, but I think that there could be more on the deck. And I really think that we're going to have to at least retest the low here. We at least need to do something like that. So we could get another rollover here and do like another 7 or 8%. And then we're going to have to see if price is going to make new lows. So this is where I'm really kind of looking at where we are and I'm like, I kind of feel like this is starting to get to be the top of that bounce or the top of the bear flag, and we should start rolling over fairly soon. Gassan, so I'm not much of a day trader, but if you're asking like what time frame to look at as a day trader, I probably get down to the 15, the 5, and the 2 minute. So you can see here that what I typically like to do when I swing trade is I have 3 time frames. I got the daily, the hourly, and the 15. Sometimes you'll see me do the weekly, the daily, and the hourly. So I'm very much a fan of having 3 time frames. And what I do is I like to really trade using my middle time frame, whatever time, however that lays out. I like the middle one, and I will flank it with a higher and lower because the higher time frame kind of gives me the bigger picture, and the lower time frame kind of gives me that precision. But I want the main setup to be on the middle one. So if we're talking day trading and we talk the 15, the 5, and the 2, well, I'm going to pretty much be taking my trades based off the 5 minute, but I'm going to use the 15 minute to kind of tell me what the overall picture is and the real strength of it. And then I'll use the 2 minute to kind of give me that exact precision move of when to get in. So that's how I do that stuff. Yeah, brighter side. Good to see you. Let's see. Yeah, Loco no Joko, Ben and Baba. But yeah, see, no bottom being hammered out at all, no base. Yeah, that's pretty much it. Just understand that just because they stop going down doesn't mean they go up. Like, okay, I think look at AI. Look how long AI. Just for an example, look how long AI was going sideways, and it still went lower. Like that's totally possible with Baba. Just because it stopped going down for this period of time doesn't mean it can't go lower. That is something we always need to remember because we need to remember like the market will do what it wants to do, and we can't get too focused on one side of something happening that we're totally taken by surprise when something else happens. And I think Baidu kind of in that same category. It looks like it's done better. Let me bring it over to here. So you can see Baidu has done better as far as stopping its descent, but is this really kind of an uptrend? It's really hasn't done much. This is some pretty rough stuff to try and get. Like even if you got here, look at it come up and then it come all the way back down and now it's back up. Like that's some real rough stuff. And the reason why it's so up and down, like the reason why we get stuff like that is because it's not in a confirmed uptrend yet. It's just now starting to get back over the daily 50. The 50 is still below the 200, which indicates it's still, fast moving average is below the slow moving average. So technically still a downtrend, even though if it's trying to fix itself, it's still just got a lot of work to do. And then I think if you look at this, probably the reason why it has kind of stopped where it stopped is because, it went back all the way to where it came from, all the way back to where it came from, big move up, come down here. And you know what? How long did it take before Baidu actually started moving up? How long do you think it's going to take before Baidu moves up again? This can be a very, very long time, which means that there's going to be a lot of chop in between because it's not in a confirmed uptrend. The best things, what we want to do as traders, we want to find this. That's really where we make the money. We don't make money down in here. We don't make money in the accumulation phase, which again, so the accumulation growth distribution, I'm going to be talking about that also in tonight's webinar. So I got pictures and graphics and stuff trying to talk about this stuff and trying to make sure that you understand, like, you don't want to be trading in this. We want to find these where we want to get in. Or if we're in a distribution market, we want to find this and we do not want to be trading that. So that's kind of what I'm putting everything together on for that. All right, guys. Well, time flew by, so that was my 30 minutes. I got to get going. Sign up for the webinar. We've got the link in the chat, and then I'll see you later this evening, and we'll have a good time. So remember, it's free. Just tune in when you can. All right. Thanks, guys.